Alan Nuckman joins us, Chief Market Strategist at BullseyeOption.com. Emphasis on the bull on a Monday where we're putting in more records. How high are we going, Alan?
Records are made to be broken. So, the question is, how much momentum can we get here? We've got the beginning of earnings season, $20 billion in pure profit from one day from three banks. So, the train's on course. And it's just a matter of using just good money management. Sell too soon. The last couple of weeks, we took advantage of these booming markets, those Chinese stocks that gave us a second chance here midsummer after that action we saw earlier than that. So there've been some plays there. So it's about money management is all it is right now, and risk reward, and there's still amazing opportunity.
All right. Amazing opportunity in the broad market. Stock picks. I know you're bringing us a pick per usual. Today you're looking, it seems like, for the crypto world to warm up a little bit. You're going for a Bitcoin miner.
Yeah, I like the setup technically, but I just want to talk about the macro market for a second.
Okay.
It continues, and again a couple of weeks ago, XPEV. We talked about some of these Chinese plays. There was 100% gain in a week when we had that surprise stimulus. No, I didn't know that, and that was not my plan to trade that stock looking for a stimulus to happen like that week. But like we said before, it's always the central government's, goal is to make sure the stock market does well. And China had the worst risk reward. Now they've had a big breakout. They had a little bit of disappointment over the weekend, but you've got to look at the sectors that have suffered. And I think the energy sector is the big market to keep an eye on. We've been talking about that for about a year, but 75 has been that pivot in crude, and you're starting to see some of these energy stocks. Even look at Exxon. Exxon's leading the way when it comes to energy, but some of these others, the Oxy, the Schlumberger, the Halliburton, they're starting to show some serious signs of life, and they have extreme risk reward on their side.
All right, like that. Extreme risk reward, time to take it. High beta trade. Should we lean into this market by going long stocks, Alan, or should we be short in VIX? Because vol's at 20 still. Seems like it wants to see this election go by smoothly or something.
20 is right at the average of my lifetime. So
it's about 5 points higher, because your average is the same as my average. It's like 17 to 16 and a half.
It's not high, it's not low. So it's relative. But for the way I look at it is there's a lot more downside potential in the VIX, meaning more upside potential in the S&P. And just to throw out a number to you, I think I threw out a number to you many weeks ago, and I know it sticks in your head. What was that number for the S&P target?
Seems like 6 or 7K. Hard to know.
No, it was 6,300. It was an odd number, but it's funny that Goldman came up with the exact same number. It's just simple, though. I just make it ridiculously simple. The fact is the distance of that drop on that old top. So 6,300 is the first target there. But in the NASDAQ, the V recovery target, once we get that complete V recovery, which we're closing in on, is 24,000, which is about 15 or 20% up above. So it's happened every time in history. So there's still a lot more. And that's why we come all the way around back to this crypto, because I think crypto has a little risk reward, bullishness as well.
All right. So that brings you to Riot, one that's kind of been dead money for a little bit. So if it wakes up, if we get a little trade going, how high do we go? We're at about 859 right now. The low is at 636, the high at 19. So if you're looking for swings, this stock is for you.
Right. And with limited risk options and the way I trade, it's very important that I can sleep well at night in a stock. And again, look at 6 is that low. So I'm looking at a 7 call. We've got the stock at 870 or something like that. That option's trading for about 250. A January option has 3 months of time. But the best part is if there's no development, the stock stays, essentially the same. In 2 months, the December option is trading for about, 225 or 235. So the cost to hold this for a couple of months, barring the market moving lower, if it just stays, is not much. So I call this a looky-loo trade. We can see if we can get some movement, and an in-the-money option is going to give a great payoff on the upside just from a modest move. So if we see a modest move in the stock, and you know how it can move, that this can have a big gain from just a tiny move in the underlying stock. I'm not looking at it for going to 20 necessarily, just like in that XPEV. It's a smaller dollar stock, a couple dollar move makes big impressions on the bottom line and on our returns.
Okay, so buying the in the money call and looking for Riot to rip here. riding it out for a while. Your target, Alan, when you bail?
Well, I would like to see it get up to, if we're looking at an option for 250, I look for my option to double in value. So I need a $5 move from 7. So we're you're putting me on the spot here, but we're looking at $12.50, $13 is what we're looking for in this stock for this option to double in value if we're paying $250 for it right now.
Got it. All right. Hold up in the morning. Thank you, Alan. Appreciate the trade.
Thank you.
Appreciate the thoughts. Alan Nutman, Chief Market Strategist, bullseyeoption.com. When we come back, we'll get into tech in some more detail. We talk to Time